Well, we're joined now by Maarten Ackerman. He's an advisory partner and investment strategist at Citadel to talk about emerging markets around the world. Of course, we've had a sell-off. One of the issues is how badly are we doing in the emerging market context, better or worse than the rest. But particularly the focus is on the rand, and people get very emotional about the rand. Even the Reserve Bank reported as being a bit jittery about whether it should intervene in the markets because of that weak rand. Good evening to you, Maarten. Let's start with that rand. It pulled back strongly to the relief of many people today to just above 13.
Yes, good evening. I think what we're seeing right now is definitely part of the emerging market storm playing out. Our view is that the storm will pass, and when the storm passes, there's some fundamentals locally that's getting better. And if the global community start to focus on that, we should see some relief in terms of the rand level. But while we're in the storm, while there's a weaker data coming out of China, the expectation is still that the US is going to hike before the end of this year. That's definitely still going to support the dollar. And then it's not only the rand, but all emerging market currencies that's taking a lot of pressure. So at this point in time, in fact, the level that we see on the rand, if you ask me, it's got probably nothing to do with local fundamentals. And we see similar moves on all other emerging market currencies. So what we need is some calm after the storm, and then people will start refocusing on the different fundamentals in the different countries. And there I do think that we might be having some relief going forward at that point in time.
Maarten, what's going to bring the calm that you think is necessary to bring the storm to a standstill?
Well, I think what we're seeing right now is the fact that the global financial markets and investors need to get used to the fact that China is slowing. We've got quite a low number in terms of Chinese economic growth going forward. The 7% that the government is targeting on that side, they very easily publish that number. But if you're looking at underlying activity in the economy, you're looking at electricity generation, you're looking at imports and exports, rail, freight, and those kind of indicators, it actually shows that China is probably growing at half that speed. And that's also reflected in the commodity prices. Now, if we think about it, if China slows to, let's say, 4%, the US is growing at, call it 2.8, 3%. That's still a robust environment for the global economy. That's good growth numbers. But it's as if the financial markets are not used to that yet. They're still expecting China to be quite a high number. And what we're seeing right now is just that adjustment to a lower growth number, but it's still a positive number. So as soon as the market gets used to that, as soon as they price in that in a 4% growth environment for China, that's still a massive demand in terms of volumes. It's still a very sustainable economy, and especially if they get it right to be more consumer-orientated rather than investment-orientated. So all of those things will bring calm to emerging markets. And I also think as soon as we've got more clarity in terms of the first interest rate hike in the US, so maybe after September, after the Fed meeting, all of those things will bring calm. It will have a certain impact on the dollar, and at that point in time we might see some relief for most emerging market currencies. If we bring that back home to South Africa, some of the improvements we've seen here is the current account deficit or the trade balance. That's been one of the reasons why we've seen quite a significant depreciation in the currency over the past couple of years, because we've been running one of the biggest current account deficits in our peer group. And of late, we're seeing some small improvements. It's still relative improvements, but that at least paves the way for some relief on the currency. If you look at our exports, for example, exports to Europe is up 20% compared to a year ago. Europe is picking up, so there's definitely more demand in that part of the world. The currency is weaker, the rand, so we're definitely more competitive, and that benefit is coming through in our trade numbers. But no one is looking at that right now, given the tension outside of our country in the rest of the emerging markets, and that's what we're saying, that at some stage they will refocus on that, and that will be a bit of a tailwind for the rand.
Yeah. Maarten, a question I'm sure you often get. What does an investor do tomorrow? How must they position their portfolios?
Yes, I think what we've learned over time is that in these kind of markets, it's probably better to do nothing. So, don't react emotionally and get out of the market. Today we've witnessed already that there's been a rebound after the sell-off yesterday. where we stand today, given that we think the global economy is not heading for a recession. We are struggling with some structural issues around the world, but the global economy is still going to turn out some decent growth numbers, 2.5% to 3%. That's good enough an environment for companies to at least maintain or remain profitable. So in this environment, we actually still prefer global equities. As a South African investor, obviously, the question is, well, do you move currency right now with the rand at 13? And our recommendation there is, well, you can manage the currency actively on your offshore portfolio. And what we are doing currently on behalf of our clients is to actually hedge out a portion of that currency exposure, given that we do think there's some relief on the rand dollar going ahead. So what
Maarten?
investors should do, it also depends on their investment horizon, but we still prefer global equities at this point in time, definitely relative to some other fixed income assets that you get offshore.
Maarten, the Reserve Bank yesterday quoted saying that they don't really want to intervene in markets, but hinting that they might. And that's an unusual signal from a Reserve Bank that since the days of Chris Stolz and the early 2000s has stayed away from manipulating the currency or trying to manipulate the currency. Do you think they're going to intervene with the rand hovering around these levels?
I think it will be quite difficult. The rand, as we know, is one of the most liquid and most traded emerging market currencies, so you need a lot of dry powder to actually influence the rand market, so to speak. If you look at the reserves that's available for the South African Reserve Bank, that's not a lot relative to the amount that's traded on our currency markets. So it will be very hard for them, compared to a country like China, where they've got a lot of dry ammo, to actually influence the currency. They might think about different measures. Part of that's the monetary policy. But in this environment, we're probably heading for high inflation very early in next year on the back of the weaker currency. The big debate now is whether we will remain above the 6%. So on the back of the inflation outlook and the fact that the US is likely to hike before the end of this year, that creates the environment for them to actually put another interest rate hike on the table before the end of this year. But then if you add to that the very, very bad economic growth numbers we've seen out today, adding the first and the second quarter, we're 6 months down the line and actually the country didn't grow at all. They will probably be very careful in terms of putting another rate hike on, given the weakness in the consumer base.
I think on that note of caution, thank you so much for making the time to join us. Really insightful and comprehensive feedback. And of course, this is Maarten Ackerman representing Citadel, giving us an insight there around emerging market currencies and what's it going to take to turn that particular corner.